Okay, traders, welcome back to Dow Trader. Today we're diving into the tick chart. If there is a holy grail in trading, this is just a piece of that. It's a powerful tool to gauge market sentiment and make sharper trading decisions. Tick measures the number of stocks trading on an uptick minus those on a downtick across major exchanges. Think of it as a real-time pulse of market buying and selling pressure. The tick fluctuates throughout the day. Positive values like plus 500 show more stocks are ticking up, and bullish sentiment. Negative values like negative 500 signal more stocks ticking down and it's bearish. As you can see, we got plus 500 here, minus 500 here. If you get extreme readings such as plus 1,000 or minus 1,000, you got to take into account other factors, such as if there's a news event causing the extreme readings. If extreme readings are sudden and without a catalyst, it could mean overbought or oversold conditions. However, if you have sustained extreme readings, it could mean sustained pressure. And if you're already in a trade, maybe you want to keep holding that trade since profit's likely to continue adding up. Alternatively, if it's just a spike to say plus 1,000, then it could be an opportunity to scalp short. This is called fading the tick. Or if it's an uptrending day and you have a pullback on price and tick is reading near zero, it could be a buying opportunity since tick is likely to spike back up again. So let's take a look at some days here. On this day, we started out way over 1,000. We probably were gapped up that day. And as you can see, it almost immediately came down. So likely the gap was closed. When you open gapped up, you're way up here and ticks moving down towards zero. That's a great sign that that gap is probably going to close. And that's how you can use tick into a gap trade. And you can see that day we had sustained readings. This is a 15-minute chart. So look, 15, 30, 45, an hour. For a couple hours, we spent below negative 500 and near negative 1,000. That's an extremely strong red day. So you just do the opposite of that for an extremely strong bullish day. And here's a pro tip. If you combine tick with a price chart, if the S&P 500 is rallying, but the tick is flat or declining, it's a divergence. Buyers are probably losing steam. You can use this to time entries or exits. For example, a fading tick at a key resistance level could confirm a short setup. But you should avoid relying on tick alone. Confirm it with other market internals, which we'll learn about later, key levels, and price action. That's a tick in a nutshell. It's like a window into market psychology. Start small, observe how it moves with your trades, and you'll be making smarter trading decisions in no time. We will be covering tick more as we continue on here, but for now, just take a look at the tick chart, open the SPY chart, read them together, and just watch and observe how they work.